Hey everybody, I hope everyone's doing well and had a good day. In this video, I'll give a brief recap of the Emini 5-minute chart for Tuesday, December 31st, 2024. It's the last day of the month, last day of the year. We have the monthly chart over here, and we're in one of those situations where the market is fairly far above the average price. I use the 20 period exponential moving average. So on the monthly chart, this is plotting the average price of the past 20 bars, the past 20 months. So we're far above the average price here. We've had several legs up, maybe one deep pullback, two, a pause, and then three, bull breakout, bad follow through, then a bear bar, closing below its midpoint. And the danger with staying long here below a bar like this is the market cycle. We had a bull breakout, a pullback, which began the channel phase. We've been channeling up. The market may have to test all the way back down to the bottom of what might be the bottom of a trading range, the start of the channel. And so here, this is a bar that if you've ever watched Al in the trading room, you would hear him say, if we get a bear bar closing near its low or closing below its midpoint, I'll just get out and maybe look to re-enter long. But here, if you're long, you're buying so far above the average price, you're getting sideways bars, deep pullback here. So the danger, like I said, is that we pull back. We have a deep pullback, possibly even a reversal. Daily chart over here on the left side of my screen. Bear breakout, deep pullback, getting a second leg down. But the second leg fairly weak. We have three consecutive bear bars, but tails below each bar. Now it's big up, big down. Might be testing support. And so going into the day, the odds were there'd probably be buyers somewhere below yesterday's low, although we don't know if they're coming in way down here. So maybe not directly below the low, but probably somewhere below the low. And because of the context, big up, big down, three consecutive bull bars, three consecutive bear bars, probably in a trading range. And so we can expect trading range price action on the 5-minute chart today. And here's the 5-minute chart. So we had let me back up. The green line is the open of the week. The blue line above is supposed to be the prior day's high. So let's do that. So I have yesterday's high in blue. I have yesterday's low also in blue. Because most bars break out of at least the prior bar. Most bars are breakout bars. The only non-breakout bar is an inside bar. So here we are on the open, probably going to break out above the high of yesterday or below the low of yesterday. We don't know which, but we know that it's likely that we'll do at least one of the two. And up here, I really don't have time for a bar by bar, but I'll take maybe a little bit at a time. So here's the first hour or so, and we have a tight trading range. It's a limit order market. Think about stop order traders. Bear bar closing near its low. You sell below 2, then you get trapped on 3. Maybe you make a scalp buying above 3, but you had to be quick. Then there was a deep pullback. Traders buying below bars, selling above bars, scaling in. Limit order traders are making money. Here, 3 consecutive bull bars, second leg up likely, but might be a late leg. 1, 2, maybe 3. It is 3 attempts by the bulls. We tried on 1, tried on 7, and tried on 12, maybe trying to get to the magnet of yesterday's high, but we keep failing. If the market tries to do something 2 or 3 times and it continues to fail, it'll try to do the opposite. It's also a fairly tight range on the open, as I said, tight trading range. And so we'll probably get a measured move either up or down of the opening range. And the bulls got their second leg at least sideways. So if we think about, let's say you're a bull, you bought above bar 11, you're trapped on 12, maybe you scale in lower, stop below 9, scale in below 10, so you scale in more on 13, 2 legs down, 1, pull back, 2. But this bear breakout is strong enough for a second leg. So even if there's a trendline break of these two bars, we'll still probably get a retest of the lows before there's any reversal. So you buy above 11, scale in below bar 10, here's your average price, and bar 14 tests the average price, and the bulls were so disappointed that they took it, and we continued lower. And now another consecutive pair of bear bars, not particularly strong. We're at the bottom of this tight trading range. The odds are we'll find buyers below and probably retest the highs. But one thing to notice here in the opening range, look at the moving average. Besides the fact that it's pretty much flat, most of the bars are closing and most of the bars are mostly below the moving average. So there's a slightly more bearish bias to the day and to the breakout direction. Every time we get above the average price, the bulls cannot get consecutive closes above. They got 2 here, 10 and 11, and then reverse down. But other than that, the bulls not getting consecutive bars closing above the moving average, except for one time here, and that got a deep pullback. So it's good to notice that. As we continue, 19, bear breakout. Is it a late leg? It might be. Maybe 3, 9, and 19. The problem though, so some traders will look at it that way. 3 pushes down, support, bottom of a trading range. So maybe buyers down here. Also, 19, testing bar 80 yesterday. So not really breaking out, needs follow through, and then a bad follow through bar. But you have other traders looking at it this way. Other traders will say the market's in breakout mode. It's getting squeezed. It's a triangle. We got a breakout of a triangle. Even if we pull back, probably sellers above, second leg down likely. And that's true. The breakout point, bar 9, traders buying below 9 got trapped on 19. And that makes 9 resistance. The bulls who bought the 9 low got trapped. They were expecting support. They were wrong. We fell below it, closed well below it. And even the follow-through bar, although it's weak, closed below it. So that's going to create resistance at the 9 low, the breakout point. And even if we get above here, there's other breakout points that will also be resistance. And we started to get trend resumption down. Tight bear channel, first reversal will probably be minor. So traders are selling above bars or selling, scaling in higher, expecting lower prices. I talked about the magnet, the possible opening range, measured move. Maybe we have to get there. And we've gotten about halfway there at this point, and that's going to create some support. So you can see here's halfway to that measured move target. We start to find support, but is bar 27 a major or a minor reversal? 27, probably minor. It's a decent bull bar, but the context is bad. There's also an outside bar. So this is a trading range bar, expanding triangle, broke out below 26, then broke out above 26. At a minimum, we'll probably retest the high of 26. 27 might get a second leg, but even if it does, it's still probably a minor market cycle in a bigger bear trend. So 27, strong enough for a second leg, so traders might look for a second reversal to get short, but as far as buying, I would not. This is too tight. Follow through bar, we did test the 26 high, became support, we're going higher. But because of the market cycle, bear breakout, pullback, channel, there's likely going to be resistance at the 21 high. Somewhere up here is a sell zone, so the upside might be limited. After these consecutive bars, first reversal down might be minor. Again, maybe we need a double top, a second reversal before selling, but you could also view it as 27, leg 1, pull back on 28, leg 2. Maybe it's already 2 or 3 legs up near the top of a trading range. At a minimum, we'll probably test below 25, and we might be converting into more of a trading range. So it might be a bear trading range day, upper trading range, bear breakout, lower trading range. We went to a new low and found support, but the breakout was weak, could not close at the new low, and this looks like trading range price action. So traders are now looking to buy low, sell high, and scalp. We're still below the moving average, so still a bearish bias. Probably better to look to sell high. If you're buying low, you risk getting trapped, but this is enough sideways to disappoint the bears. We're getting another bear breakout, but now we have 25, 31, 35, or 36. So now this might be a late leg, and even this subdivided into 2, 1, pullback, 2. So a deep pullback testing breakout points. So traders who bought below 34, trapped on 35, had a chance to exit with a smaller loss on 36. And the strongest breakouts really trap limit order traders. And so you don't want to see tails in breakouts like this. You want to see very little overlap, bars without tails, micro gaps. So 36, maybe the bears need one more bar, but even if they get it, the downside might be limited to maybe this measured move, some sort of measured move based on this trading range. We have yesterday's low also, not too far. It's possible we get there, but now we have a couple of magnets below, and there's probably support somewhere down here. So the bears get one more bar. The breakout's not extremely strong, but it's strong enough that a second leg down is likely. And the first reversal will probably be minor, continuing lower, support below. Getting a bull bar, but probably a minor reversal. Again, I need to speed it up today just a little bit. And then we get these consecutive bars. So good for the bulls. We have consecutive bars, big bull bars, big bull breakout bar, an even bigger bar crossing the moving average. Good pair of bars, but bad context. We're testing an area where traders were trapped before. Maybe that's the high close of 28, maybe it's the high of 29, maybe it's back at 21, but somewhere up here probably is a sell zone, resistance above. So looks like we need to go higher, second leg up likely, but big down, big up, probably a trading range. So it's possible we get a deeper pullback and the upside might be limited. Weak follow through 43, high 1, sellers above, might pull back deeper and get a high 2. Another common pullback level is 50%. So maybe we go all the way back down here at 45, went straight there, tried to reverse on 46, but then continued lower. Disappointing pullback. If you're a bull and you bought up here, this is bad follow through and you're disappointed. That's going to create resistance up here. So maybe you're long, scaling in lower, stop down here. And if you do buy and scale in lower, you'll probably make money. But there is a problem with having your stop here below 39, and that is if we get there, are you really eager to sell down there? Does it make sense to sell below 39? Not really. This is a strong enough breakout that we'll probably get a second leg, even if we pull back all the way below the breakout. Because you have bears who got trapped selling down here, and if they had a wide stop, maybe above this major lower high, they didn't get stopped out. They're scaling in higher, and they're hoping to avoid a loss by buying back shorts down here. Bulls who did not buy down here missed the rally. They're also looking to capture the second leg up. They'll look to buy down here at support. But the same thing happens here. So traders are trapped on both sides. Big down, big up creates big confusion and trading range price action. Both sides need second legs. 47, big bear bar, but not really breaking out of the low of the day. We're testing the low, so decent bar, but we sold off on 45, pulled back, and then sold off again. So this pause on 46, not so good. Traders not really trapped. If you bought below 44 and you were quick, you could have avoided a loss or had a much smaller loss on the retest on 46. And again, now big up, big down, probably support below. Might have to test the low of yesterday, but probably support there. This is enough sideways that the market looks like we're in a trading range at this point. Big bear breakout bar, but then bad follow through. Trying to get the reversal up, but this might need a second leg. It's hard to buy after 3 or 4 consecutive bear bars. Small trend line break and retest. And so bar 50 might be a bar that always in bears exit above and is a stop order buy that traders can take. And it's reasonable. Maybe you buy, stop below the bar, go for twice your risk, and you're testing an area where there's probably resistance. There's a reason for the market to get back here. Trap traders above, and you'd be making twice your risk. Maybe your probability is 50%. It's not a terrible stop order. Trade there above 50. And then you're getting follow through. It's not ideal. It's maybe 2 legs up to the moving average, maybe a 50% pullback of the bear breakout here. So there's probably going to be resistance here, maybe a second leg down and a deep pullback before we continue higher. So maybe it's a bear trend line break, retest, and then look for the reversal. So we're getting resistance at 50%. The bull's looking for a higher low, major trend reversal here, hoping the support holds, but we break below it, only to get the reversal on the next bar. So now we have 56 bull bar closing on its high. That's a bar. I think traders will buy back shorts above 56. Bulls will buy, taking a chance. It's a stop order in the bottom of the range with a good signal bar. And the context is pretty good. The bears got their second leg, and they failed to break out to a new low. Bear trend line break, retest. It's a lower low, major trend reversal. You can also call it a wedge, 39, 48, 55. And maybe it doesn't have a great wedge shape, but whenever you have a breakout of a double bottom, like here, maybe it's a double bottom, then you get another breakout attempt. That's 3 attempts down. 1, 2, 3. So it doesn't look like a traditional wedge, but it will behave similar to a traditional wedge. So again, reasonable to exit shorts here and reasonable to buy here. Smaller follow through bar, so not ideal for the bulls. Now we've had 2 legs up, 1, 2, with resistance above. There's resistance here, here, and above. So we don't know where we're testing, but we know there's probably resistance above. And if we have magnets above, it doesn't make sense to sell here if you can sell higher. 58, big bear bar, closing near its low, but in the middle of the trading range. So really not ideal to sell. And again, now we're in tight trading range. So tight trading range up here, bear breakout, and now another tight trading range. And we pretty much stayed sideways for the rest of the day. You can see we eventually did test this stop order above 43, and we found resistance. And look at the approach. And a couple ways to look at it, but you can look at it as basically some sort of bull channel, whether it's here or here. 1 or 1, 2, 3 pushes up and a double top. So reasonable to look to sell up here. to take profits on longs or to initiate a short. I want to quickly talk about a trade I took today. I just took one trade, and it's important for me to talk about it because I made a mistake. And, not that it never feels really great, and it doesn't feel good to make a mistake, but when you reflect on it and you dissect it, you're only learning from mistakes. So mistakes are really helpful, and you can look at them as a good thing. Also, another thing that I'm doing recently, you may have noticed in the past week or so, maybe even longer, I haven't been sharing trades, and that's because I haven't been taking trades. I've been trying to figure out what I want to do for my trading system and what's my process, and so I've been doing a lot of watching and not trading. And so this week I have a process that I feel comfortable with, that I'm deploying, that I'm testing, basically forward testing. And my trade was, I saw 9, 10, 11, and I was trying to assess the strength of this breakout. And I thought, if I remember correctly, at the time I was thinking 50% chance we get some sort of second leg and retest at least a high close of 11. So I'm looking to get long here, but I want to buy in the lower third of the trading range, and 12 might need a second leg. So I'm not really looking to buy during 13. I think we'll get some sort of second leg. Here's the pullback of the pullback. So the way I saw it was bull breakout, pullback, pullback of the pullback, look to get long somewhere down here. And originally I had a limit order to buy the close of 13, did not get filled on 15, then had a sense of urgency when 16 began to go up. So when it retested the close of 15, I bought here, stop below 9. And I knew right off the bat I didn't like having my stop below 9 because, similar to what I said down here, if you're buying anywhere in here, stop below 39, you know your stop is at a place where there's support. So if it's a classic trap. You're a bull, you bought, stop below 39, get trapped out only for the market to rally. Same thing happens right here. And so because of that, there's two options. One option is a tight stop below 9. Another option is a wide stop, scale in lower. I thought I'd put my stop below 9 and buy 15. I bought the close of 15. There's twice my risk, which would test the stop order buy above 11. So I thought that was reasonable. I'm looking to buy at the bottom and sell at the top, buy low, sell high. And I thought, at the time, again, I thought 9 through 11 had a 50% chance. And so a 2-to-1 trader's equation is positive. Now the mistake I made, there might be two mistakes actually. So one, trade management, and the other I'll get into. So when I saw bar, I think it was 17, I thought it'd be really nice if we went here. So we have a bull breakout, two-legged pullback, and trigger the stop order above 17. That's sort of my 5-minute warning here on the video. Stop order above 17. I want to see that trigger. The fact that it didn't is a sign of strength from the bears, because I think bears probably exit above a second reversal, 17 here. And so when 18 did not trade above 17 and close on its low, I had a thought that, hey, maybe I should exit the trade below 18. But to me, it wasn't clear that my premise was invalid because of the bull breakout. Now 1, 2, 3 legs down. We could still reverse here, get the second leg up. And I also am trying to just obey my stop and my profit target, my profit taking limit order. So if I take a trade, I don't want to mess with where I put the stop in the limit order. Just let it be. So trying to understand and get used to the fact that I can control my process, but I cannot control the outcome. And so I was at peace with, whatever happens, happens. I have a positive trader's equation based on the assessment of the breakout. Again, I thought it was a 50-50. I got stopped out on 19. And really quickly after, I looked back and I reassessed the strength of the breakout. There was no new information, but I think what I think I did not take into consideration the fact that this was a late leg. I think the way I saw it was trading range, bear breakout attempt, and then a bull breakout. So I didn't really see this as a bull breakout attempt. I saw it as more of some sort of pullback or just trading range. So I thought the leg count reset on 9 through 11. Of course, not a great breakout because what are we breaking out of? We're still within the trading range. But that's why I'm not looking to buy up here. I'm looking to buy a deep pullback. So I thought what I was doing was reasonable. But when I look back, it was more like, hey, maybe this was really not a great trade to begin with. Maybe this was an even lower probability breakout than I thought. Maybe it was 40%. And for 40% trades, I'd really prefer 3-to-1 risk reward. Not only that, but I also, at the time, I recognized that most of the bars were closing below the moving average, and most of the bars were mostly below the moving average. And I don't think I took that into consideration either. So what I want to change for the future is when that's the case, when it's more bearish, it's a trading range, but slightly more bearish, maybe just look to take the sell setups. And so maybe, look for a sell in the top third to scalp out in the bottom third rather than looking for the buys. And it was also really interesting. I had one of those moments where an old day popped into my head. I scrolled back and I ended up finding it. I think it was August 28th. Yeah, this was the day. So this was the day that came into my mind. This one's different. It's more clearly below the moving average, but even with all this two-sided trading, tight trading range behavior, look at the moving average. It's more sloped downward, and there's not a single close above the moving average today. So clearly, the moving average is resistance. So more dangerous to be buying, looking for scalps. And you should only be looking for scalps in here. And if you're going to swing trade and bet on a breakout, better to bet on the downside breakout. So because of that, through here, I would prefer to look for sell setups rather than for buys. Even though there are profitable longs, you can buy below 2 or 3, you can buy below 7, you can buy below bars. But for me, because of the context, I'd rather look to sell above bars because you can get this. And that's kind of similar to what we had today. So I just thought I'd share that too, because it's one of those times where something happens and it triggers an old memory, and it's a reminder to have certain guidelines at the front of your mind. So with that, I'll wrap up the video. As always, I appreciate everybody for watching, and I hope everyone has a good night. Thank you.